Hey, what's up, everybody? It's Omar. It is October 15th, 2020, 5:20 p.m. And I wanted to make a video talking about trade, how, my experience been trading options and show you like kind of how I set things up. This video will be a little longer than usual, obviously, if I gotta kind of like show you like just the basics. And, I'm not gonna go into like a tremendous amount of detail, but I'll walk you through some of this. I started trading options like more seriously a couple of weeks ago. It's been like 2 weeks now, I think, and it's been going well. Had a good day today, trading Tesla, um, and I'm really liking the options. I do miss my shorting my dog shit. I am gonna open up an account probably um, soon, maybe with Centerpoint or Guardian Trading, one of these brokers. Gotta figure it out. I don't think I'm going back to work anytime in the near future, so I can't use DAS at work. That's why I never did it. So might as well do it and be able to do both. So that's kind of the plan. But right now, I'm just focusing on options, just learning it. So I use TD Ameritrade to trade options. They charge you about 65 cents a contract. Um, you can probably negotiate it down. I didn't initially, but I'm definitely going to give it another shot eventually after maybe a month or two, see if they can bring the prices down to like 30 something cents. And this is my setup. Now, obviously, this looks very busy, and I'm not going to use this to kind of walk you through everything because, it's busy. I'm just going to use a nice, simple, clean chart. But basically, just so you know, these are the time frames I trade off. This is the 5-minute time frame. This is the 2-minute time frame. This is the 15-minute time frame, and this is the daily. I have videos on my YouTube channel how you can set all this up. You can watch. But for this video, I'm going to just focus on options. So options is very, a lot different than trading equities in the sense of how you execute your trades, but in terms of like the patterns, they're the same. So, and a matter of fact, when you trade options, you really focus on large caps, and to me, they react a lot better to support and resistance, and in my opinion, personally, a lot easier to trade than small caps. That's just my opinion, and you don't have to go crazy looking for scanners and looking for charts because you trade the same things. So down here on the bottom left-hand corner, these are the options tickers I trade. The big boys, Nvidia, Tesla, Apple, Amazon, gold, silver, Facebook, Boeing, Zoom, Baba, NKLA, Qs, Spy, Lulu, Peloton, MU, Nike, Disney. Like these are the stocks that I look at. A couple of others here too, Netflix and all those others, and I look to them to trade them. So trading options is definitely a new experience for me, and I'm growing. So I take small contracts. I don't take no more than 5 contracts on any position. Yesterday I did try to take 10 on Tesla. I missed my execution, but that would have been a big win. But I'm trying not to. I'm trying to stick with no more than 5 as I get acclimated with trading options because this is new for me. So what you want to do when you trade options is the way it works is you're going to notice that you're going to have these options up on the top, and when you go to trade, this is where you can get your options contracts, and there's all types of options. And if I click this button down here, you can see there's all different ways to trade options. I mean, all this shit, this is like geeky, complicated shit. And that's not what I'm about. I'm about simple, keeping it simple. So all I trade is single, meaning that's the default. I buy simple calls and I buy simple puts. That's it. When you buy a call, you're buying a call with the expectation that the stock price is going to go up. All right, so you buy calls. When you buy puts, all right, you're buying them with the expectation that the stock price is going to go down. And these are what you have the stock prices. The strike, they have what's called strike prices. And what you're going to notice is that you have these two terms they call in the money and out the money. In the money means that the stock is within the strike price. So for example, Nvidia is at currently 558.80. So anything below that would be considered in the money. So this 555, 552, 550. See, this is all dark because it's considered in the money. Out of the money means the price of the stock is not currently where the strike price is. So like let's say if I bought a call right now at with a 560 strike price, it would be considered out of the money because the current price of Nvidia is 558 and I'm buying a strike price of 560. So it's below the actual price. I'm sorry, it's above the actual price of the stock, so it's considered out of the money. And when I buy when I trade options, I always get them out of the money. I always get them out of the money, and I set this up to have my volume because I need to know how liquid contracts are, because you don't want to buy an option where there's no volume, because then you have nobody to buy and sell to. So it's important that they're liquid. The majority of these big boy stocks though are. So you don't necessarily have to worry about them being liquid. So what I do, right? So what I do is I detach this. So what you do is you right click, you click this drop down, I'm sorry, up here, and you click detach. So what I do is I have a 43-inch monitor. I have two 43-inch monitors in my house. And what I do is I keep this in a separate window. So I have this first screen with my chart, and then I have a second screen on the side with this layout. So it would be right over here, right, well, you can't see it, but it's to the I have a screen to the left of me, and I have it placed there. So what I do each morning is, and I'll just X this out right now for a second. What I do each morning is, I go pre-market, and I'm going to clear this out. And what I do is I look at the chart, right, and I map my levels above or below the strike price. So for example, let's say I was looking at, today I traded Tesla, so let's talk about Tesla. So for example, Tesla to me is the number one chart to me to play, because your returns are really, really big and fast, but you can lose your ass quick on Tesla, so you have to be careful, right? So what I do, this is pre-market, right? This is between 5 a.m. and 9:30, right? Market opens at 9:30. So what I do, and I like to use the 5-minute time frame. You can use, other 15-minute and hourly, whatever you want. But what I do is I literally map my levels above and below, so I can get a sense of where the stock could potentially find its support or reject at resistance. So if I was looking here, and this is this morning, right? I'm going to look at, all right, first I'm going to look at what's above, right? Because it's in this range right now. So what I would do is I'm looking above, and this is the previous, right? This was the previous day, right? So I'm going to zoom in here, and what I would do is, well, this is kind of where it opened, and I know if you followed me for a long time, I've had videos where, I always tell you, like, map the bottom, and then map here, and then map here, and the top wick. And I don't map wicks anymore, because I find this to be noise. I focus on the body, because the body is where the buyers and sellers are. So if I was looking at this, right, this is what I would do. I map a line right here, right, and it went all the way up here. So I map a line right here, right in that body. You notice I'm mapping it right into the body. You see, right into that. I'm mapping a line here, right in that body, because this is where it pivoted. Okay, and then it continued. It gapped up here, so I'm mapping a line here, right? And this is kind of like the highest point, so I would map it actually right here, right? And then it gapped down, found support here, then ripped all the way up, and its highest point was here before it sold off, right? So now that would have been today's Thursday. That's what I would have done Wednesday, right? And I would have also mapped down here below, right, the previous day. So same thing, right? I'm looking, right? So where did it? Let's see where it started. Right? It started from, right? So got here. I would map this right here. I would map this right here, because this is kind of where it gapped up all the way to the top. This is kind of where it consolidated. I mean, technically, if you wanted to, you could map this level too, or if you really wanted to. But just to keep this simple, I'm just gonna just map all the areas where it pivoted. So I mapped this, and then it kind of came up here, pulled back here, so I can map this as well. And then you can see it made a second attempt at the end of the day right into this, and it kind of dumped. So I'm good. So now, all right, so I got my levels below, I got my levels above, right? So Now it's pre-market. So sometimes I'll map pre-market too if I see anything interesting. I would probably map this because you can see like it kind of has a consolidation here, then it pulls back just to get a sense, right? So what happens? 9:30. So before I talk about that, it's a couple of things, a couple of other things that I want to draw your attention to. Okay, so when I'm ready to place, before I place my trades, I have two separate grids. So this is you see, so this is, you see how I like, so in Thinkorswim you have the ability to set colors. You see how you have the thing here in the chart? You see I can set colors. So this is a brown color, and this is, and then I have another one which is a green color. Right? You can pick whatever colors you have. You have to link them, to link charts to this. So the way I designed this, if you're like, oh well, how the hell you even did that to begin with? What you can do is you can detach another windows, right? So you hit detach, right? So I hit detach, right? So now I just detached this window, so now I got an extra window, right? So what you can do is you click this button here. It's going to say customize grid. You're going to click this, then you're going to get this sidebar. You see this plus here? That means you can add a new window to the right or one to the bottom. So I'm going to add one to the right. So now I have two charts, right? And here is, you know, the chart with my grid, and then I can put a link here. So let's say I want to make this green, and you see, because I had this Tesla call here earlier, you can see that there. I'll explain what that is in a second. So now what I do is I'll have this chart be the color of whatever I want to link my strike price to. So I'm going to talk about this in a second. So let's say I want to make this, let's say I'm going to make this yellow. All right. So I'm going to make this yellow, and I'm going to make this yellow too. All right. So now what I do with this side, I'm going to uncheck chart. I'm going to click active trader. Okay. And then I can, you know, on this first chart, I can click time and sales. I can click level 2. And now I have, you know, a chart here, right? And over here I have the active trader. This is where I can enter my positions. All right. So you can set these buttons up to reflect whatever you want. You can like, and if you click this drop down, this is where you're going to see the positions. But you're going to see in a second when I take my contract from here and put it and link it to a color, this is going to reflect contracts and not price of shares. So let me pull up that Tesla ticker for a second. All right, so here's the Tesla ticker, right? So the market opens and it starts spiking, right? It starts spiking, and what I do is immediately, if I got a ticker that I'm interested in trading, right? Now you see I set this up, right? And I'm gonna make this a lot smaller. Let me shrink this down. So I write, see I clicked it and dragged it down. I'm gonna duplicate this as well, detach this as well. So now I'm gonna have two, and I'm gonna make this one a separate color. So let me make this smaller so that you can, I'm gonna try to make this smaller so you guys can see just for a second. I'll make it bigger in a moment, but this is, let me actually make it a little bigger now. So what I was expecting, because the market was kind of dumping, I was expecting a morning push to buy puts into. All right, and that's what I was waiting for. Also, just so you know that when you have this and you want to get rid of it, just re-click the button and then just check off customize grid, and now it's gone. All right, so now what I'm gonna do is I have this one color. I'm gonna have this yellow, and I'm gonna turn the other color, let's say blue. All right, so what I do is I set my contracts up, and this is where it can get confusing, and I don't want to go too crazy into this because this can be a long drawn out video, too drawn out, and I don't want to do that. But basically right now, right, if the stock, if I'm looking for the stock to open up, right, and let me pull this out. right? So this is the morning, right? So I'm looking for it to push into a overhead level of resistance so that I can get puts. So I can get puts. So what I was waiting for was the push into resistance to then actually get puts and bring it down. That's exactly what I did this morning. Now, what I do is if the market opens, right, and I see the current price of the stock right here, which was at 448, right? Remember, I set up my calls and puts out of the money, meaning they got to be outside of the realm of the actual current price of the stock, right? So if this was 448, then I'm looking to get option contracts. At least if I'm gonna buy calls, they're gonna be, above 450. So what I do is I set it up both ways. So I go right away at the open just to have it up. This is the strike price 460, right? So you notice here's the bid and the ask. This is how you set it up. Watch. I'm gonna set this up because I'm looking at this strike price. This is the price of the contracts currently, right? And there's a lot of volume here, right? 49,000 shares, that's a lot. Anything 1,000 and over is considered a lot in the options world. So if I right click on this, on the very bottom, you're going to see it's going to say send to, and whatever color you have linked, that's where that strike price is going to correlate to. So if I have yellow here, watch, when I go to yellow, you're going to notice now that it's going to say, right, 460 contracts, you see? And with the weekly, right, because I'm buying them for the week ending, right, October 20th. That's what this 1020 means, 16 is. So what's cool about this is that the chart is going to reflect, and I'm going to make this a little big. I'm going to move this out the way just so you can see that it's not going to look like your regular chart that you see here, right? It's going to reflect the buyers and sellers of the options contracts. So this is what literally the options contract actual chart looks like. So meaning at the price of the open, these option contracts were 337, and you saw that it pushed, right, from the open, right, from 448, it went all the way to 456. So, hypothetically speaking, had you bought these option contracts, I'll put this like a 1 minute time frame so you can see. Let me zoom out. So had you bought these at the open, you could have got them in the 350 range. Your contracts would have went all the way up to almost $6. That is, those returns are huge. So there's other things that go into options, delta, time decay. I'm not gonna talk about none of that, but just know that when I don't even look at any of that shit. I just know that I'm buying a contract. If I'm buying a call, I'm expecting the price to go up, and if the price goes up, I'm making money. All right, that's really, think of it that way. Don't overthink it. I mean, you can go into more detail. There's a lot of videos on YouTube about all this shit, but I'm not going to talk about that today. So, right, so I showed you how I just set up my contract for the calls, right? And you can map your support. I'm sorry, one more thing. I map my support and resistance in these option contracts charts the way I do with the regular chart, because it kind of reacts the same. So if this peaked here, I would be mapping a line here, and I would map a line where it pulls back to, because I may get another opportunity. So what you need to know about calls is, as the price of the stock goes up, you're making money. Now the opposite is puts. So let's talk about puts. And this is how I made my money this morning. So I took quite a few trades. I did really well today actually. So let me move this up here so maybe it makes it a little easier. Okay. All right. So now this, right, is a duplicate of this, right, that I made, and this color is blue. So I'm really more focusing on, because this happens so fast, it's very difficult to get filled, right? And I usually like to wait a few minutes before I get into a trade. With options, you should wait at least 5 to 15 minutes, let the chart form to get a sense of the direction, and then you can kind of get in. That's generally the best way to approach it, but it really just depends. There's a lot of variables. But so for me, right, with the puts, right? So I'm gonna bring this over here. With the puts, okay. Remember, I was looking to buy puts because I was waiting for the push into this resistance level here to then expect it to go down. Now remember, when you buy puts, it's like shorting, so you make money when the stock price goes down. So when I had this set up, as the stock price was going up, I set this to reflect the price down here. So I wanted to be out of the money. So I had like, I think I had 450. I think I had bought the 450 at the time. I had bought 450 puts, strike price of 450. But you know, right now technically it's at 448. Actually, it's actually less than that right now. Oh yeah, no, it's 448. So I had bought my options contracts. I think it was like 448. So what I did was I right clicked, right, and I went send. And now watch, I'm going to send it to yellow because I have the other chart as yellow. And you're going to I'm sorry, blue. I'm sorry. Oops, sorry. Let me send that. I'm gonna send that to the blue chart. And the other one, the calls, I had it set to yellow. Sorry. So you're gonna see now. This is my options contract. This is my chart for calls, and this is my chart for puts. So you can see as the price of the stock went up and the market opened, this went down. All right. This started going up. All right. And let me I'm sorry. Oops, I got it mixed up. Sorry guys. Sorry. Here we go. Let's go options, send blue. Okay, here we go. Sorry, yeah, there it is. All right. So you're gonna see that when the market opened, right, the price of this was going down because the stock price went up. But as soon as it found resistance, that's when the price of the contracts went up. So what I did was when the stock, and now I can move this out the way, when the stock got up in here, I went and I executed my puts. So I bought puts right into here, and at that time the puts were like, I don't know, I don't remember what I paid for them, but you know, it was somewhere in this range, and I got a big dump. So it came in here, it pushed down, and I sold like right into this, and I made my win. Now what's cool is if you have your call chart open, like if you're a sniper and really fast, if you sell into this, you can quickly, because you know this is an area, a quick level of support, buy calls and then ride this up, and then sell into this and then buy puts, and then, you know, kind of ride it up and down. That's kind of what I did. I got two different trades on Tesla today. I got puts here, and I got calls off this bounce right into this, right into the push. I sold right into this push. I got them like right around here. I bought calls and then sold them right into here. So that's kind of how you do it. Instead of buying a stock and selling a stock, or shorting a stock and then buying a cover, you're buying calls and then selling the calls, and you're buying the puts and then selling the puts. So that's kind of how I set this up to make my trades. All right. So hopefully that made some sense to you. I do have a room that's free that you guys can, you know, come hang out and, you know, come join and learn. Look, I even, you know, have my call outs, and a lot of the guys in the room do as well. So I was talking about when I placed my trades, I told my I mapped like my support and resistance. Like I talked about my calls. I think where's the first trade I made? I'm trying to see. Oh yeah, this is the first thing. This kind of was a fake out. I thought in this first open that this was gonna dump into this 453 level, and actually pushed into the next level above. Actually, yeah, here I thought it was gonna pull back, but I'm sorry, here, and it actually it continued to push, and it gapped into this. But this is, I think, where did I put? Oh yeah, and 456.50 was the next level, and you can see it got to about 456.50. All right, you know, so you know, I let people know. A lot of people post their trades too. You know, I post charts explaining things. So I'm trying to remember. Oh yeah, this is where I got my see, I'm long Tesla 360 calls at 370. That was the price I paid. All right. So that was a pretty good a trade. I think, did I say 360? Yeah. Okay. Yeah. So I map all my stuff in here, and I talk about everything in here. Hey, here we go. I knew I put that. I got Tesla puts for a scalp. Yeah. So here we go. I got a scalp here. So I did several trades, and I also scalped I think it was a BA. I think it was, yeah. This is my other call out. So without boring you, just join the room and you can see everything. You can go back and look at everything. But that's how I do it. So that's kind of what I do. And like I just map my support and resistance levels in advance. So like for example, I'll show you. Let's pull up another chart before I end this. So for tomorrow, this is Facebook, right? So if I would be looking at this very simply, I'd be mapping this, right? Because the top here, I would map down here, right? Because this is kind of where it came down to. Top came back up here, right? I would map this too because it kind of like popped here. This is where it kind of like popped and then dropped and then popped and then dropped and then dropped here. So I would map that, topped here. So, and I would map this level here because this is where the body is, see? So I'm mapping the body on the 5-minute charts. And it came back up, and you know, I wouldn't map anything here because this is kind of like noise. It's in that channel. And so tomorrow I'm going to be looking at pre-market, and I'm going to look at, right, what's the level below it. So here, these are some levels below. So obviously this is a level that I'm going to be looking at. I would map this as well. So I would map this. And then you get a lot of like kind of bounced here a few times. I would map this, and technically, to be honest with you, yeah, you can leave that, and you can map this too, just in case. Sometimes they don't even. I would map it right here. So now I have my levels below. I have my levels here. I got to map my levels above. So if I'm looking at my levels above, right, this is kind of where it ended. It kind of closed here. It gapped up to about here, right? So I would leave that. I wouldn't look at this. It's holding that. And to me, another key level would be this. All right, potentially you can map this right here. And then it kind of came all the way up right into here. That's it, guys. You keep it this simple and you look at it. So if I'm watching Facebook, I'm going to see how it's going to react to these levels to potentially take a trade tomorrow. Do this and watch the magic happen. That's all you need to do. If you map your levels, you're already prepared. You know where potentially the stocks may go to potentially scalp and bounce and buy stocks. That's it, man. These fools charge you a shit ton of money, and you know this is not even that hard. I've been teaching people how to do this years before any of the rooms even talked about this shit, because I'm really a teacher in real life. So you know, so I try to keep it simple. So I hope you found this helpful. Remember, it's all about these contracts, strike prices and all that stuff. So remember, calls and puts. Calls means that you're buying because you think the price is going to go up. Puts, you're buying puts because you think the price is going to go down. You make money when the stock goes down. So that's kind of how that works. This video is about 28 minutes, so it's not too bad. And you know, let me know. So I'm going to leave a link in the description so you can click and join the room and come hang out with us. Sometimes we even trade live on the Discord. We jump on, we talk about what we're trading in real time. So I'll post, sometimes I post my execution so you can see what I took at the price, all that good stuff, right? So so have a good day, guys, and come join the mob. All right, have a good one.